Hello everybody and welcome to part 2 of order blocks. In today's part we're going to be going over what makes an order block valid and our order block rules here at SE Academy. So let's get started now. Our order block rules. First of all, there must be a break of structure to the downside or the upside, right? And the reason we are looking for a break of structure to the upside or downside is because this will validate an order block in the sense that an entity in the market or somebody in the market has created a movement which has broken a significant structure in the market beforehand, right? And that person who has done that is smart money. So you'll notice with all of our rules, we're looking for ways in indicating that smart money has gotten involved with a certain movement, right? And that those are what all of the rules will try and indicate to us, right? So if I'm looking for a break of structure to the upside or downside, I'm basically saying is smart money involved with this movement, and are we going to look for mitigation and entries following it, right? So first of all, there must be a break structure to the upside or downside. Second of all, we will be looking for high volume following the creation of an order block. And again, we're doing this because the only people in the market which can create strong, rapid, impulsive movements is smart money, because they are the people with the most amount of money which can create these impulsive and rapid movements, as I'll show you with high volume. Thirdly, the order block should not be clearly mitigated. So that basically means it shouldn't have been mitigated in the past and we are entering again from another mitigated order block. And I'll explain all of these in more depth with the charts. And lastly, the order block should be pro-trend. Now, you don't always have to follow this rule. It's good to follow this rule because you're less likely to get stopped out. But yeah, the order block should be pro-trend. It doesn't have to be pro-trend. So now let's move on to the charts. So if I begin with our previous example on CAD JPY, we're going to go through all of our order block rules, right? So first of all, we're going to look for the break of structure, and I'll begin to write these down as we continue. So first we have the break of structure. So I'll just label that as BOS, as you can see that I've got here, right? So first of all, we have our break of structure. And so really there are two break structures. We've got this area of smaller time frame structure that is broken. So this area over here, this structure has been broken. And then we've had this structure which has also been broken. So now this order block has been validated. Second of all, we're going to look for high volume after the creation of an order block. Now, how do we identify high volume after the order block? So we've got our last up move before the down move. And so after this movement, we should be seeing price taking off to the downside. And we can see that through here, this big red candle, so this engulfing candle. And then it's followed by, these huge impulsive movements to the downside, right? And, even here as well. So that tells me that an entity in the market is creating rapid selling and huge amounts of selling, which is most likely to be smart money. So your institutions, banks, as I mentioned in the previous video. So that is rule number 2 followed, and then we're going to go for rule number 3. Is it mitigated? So didn't mean to do that. Mitigation, right? So now we're going to look for mitigation. Now, if I quickly go over here and explain what mitigation looks like. So let's say we have an order block over here. And I'm just going to draw this out really quickly. So let's say this is our order block, right? And I'll just do this. So this is our last down move before the up move, which broke structure to the upside, right? Now, if this was an order block that we're looking to trade from, and we're looking to see some mitigation from it so we can enter from. So if I'll just show you that, so price will then come back, mitigate it, and then we'll get an entry from this point, which I'll explain in a later video how to get entries. At this point, this order block seems to be valid because price has not tapped back into this zone. So once it taps back into it, we can assume that smart money has closed all of the negative positions that were once here, and after this mitigation, they are no longer looking to mitigate this zone again, right? So But if we saw a scenario, for example, like this, as I'll quickly show you, where price comes, so it creates a zone and then it quickly taps back into it, but overall it leaves the zone, I would not be expecting to take another entry from here because it's already been mitigated once, right? So we can assume from this point all of the negative positions that had to be, you know, closed have already been closed. So smart money is no longer looking at this area, you know, for further mitigation, right? So that's what mitigation essentially is. So if we look at this zone, on this time frame, it's not mitigated, right? And if I just, for example, go to the 2-hour time frame, we can see that there are clearly no wicks back into the zone. Price doesn't wick back into it at any point. Or price doesn't, you know, come back into this point and mitigate any of the, you know, the negative positions that are in this point, right? In this order block. So we can now trade this order block knowing it has not been mitigated yet, and we will see some mitigation to continue with. So that is rule number 3, also followed. Now we're going to go through rule number 4, which I told you guys at the start does not always have to be followed. So that is pro trend. Now with this trade, price is pro trend, right? Because first of all we have, for example, a high here, and then it's followed by a lower high, and then it's also followed by another lower high, and then another lower high, and so on and so forth, right? So we are clearly trading a downwards moving market, right? A bearish market. And then we can see over here as well, a lower low, a lower low, lower low, lower low, right? So we are clearly trading a bearish market. So this order block is also pro trend. So now this order block has followed all 4 of our rules, right? And the 3 main most important ones, the first 3, it has followed all of those rules. So now this order block is one that we can trade, right? And if, let's say, we just took an entry, which I'll show you guys in the next one, it doesn't really matter because we're not really looking for entries in this video, but just to show you guys, you know, price will mitigate it and then it will go and do its thing, right? So if I just show you that on the daily time frame, just to speed things up, eventually we hit take profit, right? So that's essentially what an order block is in terms of the order block rules, and so that's the sell order block example. Now we're going to go over the buy order block example, which I will quickly bring here. So yeah, let's begin. Now, again, we will go through rule number 1, a break of structure, right? So we have already identified the break of structures. Over here, there was a previous area of structure in the market, and price has broken it, right? And now we're going to look for high volume following the order block. So if I go onto the 15-minute time frame where I actually identified this order block. So for now, we'll just say it's this last down move, right? Because I actually refined this order block, and I'm going to explain in a later video what exactly happened here. So high volume, we've got some high volume here, here, and here, and here, following the creation of the order block, right? So that is also rule number 2 followed. Now, rule number 3, is it mitigated or not? Now, in terms of this example, what I'd say is on the 5-minute time frame, our 5-minute order block, so this last down move, is not mitigated, right? Because none of these have, you know, really mitigated this zone. And one thing with mitigation is, if price mitigates, so let's just say this is an order block, right? If price just about comes here and it just, you know, just about taps into the zone, I wouldn't be too concerned. But if price does something like this, where it comes deeply into the zone, and, you know, it mitigates past the 50% line, so past half of the order block, or, you know, it comes in a quarter of the order block, or, you know, it even comes to about down here, that's definitely a mitigated order block, right? You know, in comparison to something like this, where it just about taps the order block, or it just about skims it, right? So with this one, I wouldn't be deeply concerned if you thought this was mitigated, because first of all, price hardly taps back into this 5-minute OB, and even with this order block over here, it doesn't tap it back into it. You know, you could say this was a tap back into it, but it doesn't actually, you know, mitigate the order block fully or anything like that. And so yeah, so that is number 3 followed as well. It's not clearly mitigated, right? It hasn't shown us a mitigation like this, for example. So this would have been your entry, right? It hasn't shown us anything like this. So yeah, this order block is not mitigated. And now rule number 4, is it pro trend? So if we just look here, so this was the order block. Now following it, we did see some, bullish market structure. So we saw this low over here, and then it was followed by another high, and then another high. So these are high highs now, another high, and then another one here, and then we were, also followed by higher lows. So another high low, and so on and so forth, right? So all of the order block rules are being followed, and then of course, if I just replay price to here before it got mitigated, and we head on to the 30-minute time frame, what exactly can we see? If I just power stops there, price will mitigate this order block, triggers in, and then eventually it will hit take profit, right? So that's exactly what's going on in terms of our order block rules, and I'll see you guys in the next part.